Hello, hello. We are live. Actually, we were chit-chatting so much in the background there, and we lost track of time. It's like, hey, it's go time. Good morning. I guess when you're having a great time, you lose track
Yeah,
of time,
yeah,
right?
yeah.
Good morning, everyone. Welcome to the show, Coffee Time with Marie Teresian, CPA. For those of you returning to the show, welcome back. For those of you who are new to the show, please make sure to put a hands up or a thumbs up in the chat so we know you are new. For those of you who are listening in, so I have to make sure to welcome you as well. I hope you are able to find us on the different channels we are at. We are on Podbean, Apple Podcasts, Google Podcasts, Amazon Music, and so many other channels as well on audio. So you can follow us, share, download, and listen on the go. Of course, I want to encourage you always to like, share, subscribe to the channels that you are watching or listening to us. And that way you also know whenever we have uploaded or we are going live with a new show. So we go live every Thursday at 10 a.m. Eastern. We are here in Miami, always a wonderful weather here. Anyway, just a quick intro. Marie Teresian here, certified public accountant and a chartered global management accountant. I'm an experienced auditor and a CFO. I'm currently working, and I'm excited to say that, as a green card on my, I'm working on my the coaching certification. So, as a business transformation coach, I'm going to be able to not only help our clients with the financial side of business strategies, but also from the sales and marketing. So I'm super excited about that. And I've authored a couple of books. I have an ebook that's called A Business Owner's Guide to Operational Accounting, and I will put the link in the chat. And the other one is a complete guide to business growth, and that's available on Kindle. And I will also put that link in the chat as well. As always, my featured guest is my friend and tax colleague, Pedro Gonzalez, CPA. Good morning, Pedro.
Good morning. Good morning. Good morning. Yes, we were having a good time backstage. Pedro Gonzalez, business and tax strategist. Tax season is here, and that's what we're here for, to help you in your tax strategy. Now is a good time to start thinking about 2022 and start doing some tax planning for this coming up year. So we'll be discussing a couple of things later. So I simply will tell you that we're here to help you in at least very three strong fronts, and that's going to be tax planning to help you reduce your taxes, improve your cash flow. And cash flow is king. Doesn't matter, either be at home or any kind of business. And number three, exit strategies. We all gonna exit. It just depends how we're gonna exit. We have the ebook on real estate investor tax strategies. Again, well received. We encourage anybody that is interested in learning or looking into real estate investing to download the ebook. Is free. It has some good material. It follows with a 7-day e-course, additional information, and then follow after that with newsletters that will keep you up to date on real estate taxation issues.
Yes, it's awesome. So basically, guys, between the both of us, you have a business coach, you have a tax advisor, and everything in between. So we are so excited to help you with that. So just a quick, summary of things we've covered in the past. In the past few months, we've talked about, self-employment, other tax-related issues, different tax due dates. Of course, we will always try to keep you up to date with anything that's coming up new. We've also done a series on tax planning, so I really welcome you to go back and check those out. And as Pedro mentioned, it's super important to start tax planning early on. You don't want to wait until the end of the year. At that point, it's kind of too late. There's no more time to plan it out. So that's why planning is kind of, you want to start early on. So, the other, we've also covered buy-sell agreements, partnership agreements, employee retention credit. This is something we covered a couple of sessions ago. We've also covered, success mindset, entrepreneurial mindset, defined gig work, practice, hustle, all these keywords people throw around and what does it really mean. And then actually last week, special guest, David Share, and it was a really cool conversation. It was about, how mortgage, brokers and lenders actually handle self-employed individuals, right? Because it's just much more difficult for a self-employed individual to get, mortgage for themselves. So David walked us through that, and I really welcome you to go back and check that the last week's show to get more information on that. So, but today we have some, we're coming back to our war stories kind of thing because Pedro and I love doing this. War stories are basically, situations we have encountered, through either our clients or prospects or people we are currently helping out. But before that, I'll let Pedro just cover, maybe give us the heads up on the latest tax due dates, and then from there, I'll intro one of the subjects that we are working on.
Very good. So yeah, the war stories, is a way for we like to share it because through that we also learn. We can learn from, in essence, from situations that we see happening, so we can learn from that, and that's why we share it with our audience, so then they can also
Mhm.
learn from that. Let's start with the tax deadline. This year is April 18th, which is this coming up Monday. Now, I have been asked why April 18th and not this Friday, which is April 15th. And that is because the day after Washington, D.C. has a holiday. I'm trying to remember, Emancipation Day. And because of that, uh, the reason is April 18th. Don't ask me much more than that, but that's the way it has been. Uh, and so because of that, you have a little extra time. So just be glad that you have a couple extra days to pile, pile those extensions. Uh,
Yes, it's a free 3 extra days for you.
exactly. So so get it done. If you happen, if for anybody listening, if you are in Massachusetts or Maine, you have until Tuesday, April 19th, because of a holiday observance on those states are called Patriot Day. So for those
Mm,
on those states, they have even one more day. Uh,
lucky them.
yeah. Uh, but
Awesome.
extensions. I mean, make sure that you do. If you need extra time, I tell people, listen, instead of rushing through and making mistakes, it's better to file the extension, especially if you have complex returns. You have
Mhm.
investments, real estate. You have very complex returns. I would encourage you to file an extension. Do an estimate. Now, pay. You remember that the extension is an
Yeah.
extension to file and not extension to pay. So pay an estimate with that. Avoid
Absolutely.
unnecessary penalties, and then you can go ahead and use that to give you some extra time
Mhm.
to properly prepare your return.
Yes, excellent. And we've covered this a few times, but I'm glad you mentioned it again. So going into one of our war stories, so we have currently a client that she came to us with, with quite a concern, and giving everybody who's watching today, and whoever is listening, a little background on her, and of course we won't give any names or anything. It's just the concepts, right?
Cool.
Ideas, situations to help you keep an eye out, or just prep yourself. The lady is, she was married, and her husband actually handled all of the tax filings, anything related to the house finances, mortgages and all that stuff, payments. And she just, handled her, daily work or her household, whatever. So unfortunately, her husband passed away, and she had absolutely no idea what tax returns were filed. She did not have any access to records. She had no access to his computer. She did not even know where to start. And of course, in the midst of all this grief, she did not even know really what to handle first. And of course, as other, as she came out of her grief, there was other, situations that arose, that there was possibly some loans taken out in both their names that she was now stuck with. So long story short, uh, she wanted to resolve this big gap of, years of possibly her husband may have not filed the tax returns, and she's not aware if they are filed.
Yeah.
So she came to us to help guide her as to what she should do. How she be good with the IRS and make sure that everything is done well, but at the same time, there was a part of her life where she was not really handling that, and how can she kind of like take responsibility on something now that she really had nothing to do with it at the time. She was trusting her husband, her spouse, to take care of that. So this is the overall concept of how the client came to us. So I'll open it up for Pedro to kind of start filling it in, of how we're going to be handling her situation.
Well, one of the options is the innocent spouse. Because in her case, I would not say that applicable in all situations, but she could qualify for that because again, of the circumstances, she was not really involved, and it's not unusual. It happens, and the bottom line is when you encounter a situation like that, is to quickly gain some guidance about how to address it. Yeah, I understand, the grievance of the loss and all of that, but the quicker you can at least or engage somebody to at least help you to address the situations with taxation, it will help you mitigate potential unnecessary headaches. Which it comes into penalties. Some of them can be abated. Some of them can be at least reduced, negotiated. The sooner, the better. Um, so yeah, there'll be some research that has to be done because, like you said, we don't know at this moment what returns have been filed.
Right.
Uh, exactly in the records that were kept. So, um, but again, in situations like that, the best thing to do is to quickly engage somebody to at least represent you, power of attorney, then at least help you start having a communication with the IRS, and is the best scenario for you.
Yeah, yeah, absolutely. So that's one of the steps that we'll be taking on her behalf to make sure. And then, so you mentioned the what was this spouse?
The innocent spouse.
Innocent spouse
Yeah.
thing. Okay, so this was something that came up as well, where she had asked someone, another accountant, CPA, and they had told her, "Oh no, you don't qualify." So, would you be able to kind of walk us through some of the what is a qualification, and what should another, let's say, accountant or CPA that might be listening in should be doing before they just assume that it's not applicable. Because I
Yeah.
think it's our job as public servants, right, to be able to say, hey, let's take a look at it, let's really work through
Mhm.
the qualifications and see if there's a possibility, and because we don't want to give complete hope, but you also don't want to break up the hope either. We want to be able to say, handle it with care, and say, let's take a look at it. Let's look at
Yeah.
all the different situations, the
Right.
qualifications, and see where we go.
Yeah, like the name states. Will summarize it. As in essence,
Sure,
is
sure, of course.
somebody that has, in essence, been disassociated with all of the financial transactions of the household. Yeah, that's
Right.
basically what happens. Is somebody has dedicated himself or herself to either the caring for the house or something like that, the raising the children, and then the other spouse is the one that has been, in essence, either be he or she in charge of the, in essence, the finances.
Hmm.
So I will not tell you that what this individual guarantee will qualify. We'll have to do a little more investigation, but based on the preliminary information, it seems like she would qualify. Now, usually it happens in those situations where one party is, in essence, it signs a return but has no idea. Now, that having no idea what the return is also goes into their education, their ability
Mhm.
to discern, because even you might not be involved in
Right.
the finances, but based on your education, for example, let's say yourself right now, you as a CPA, to say, well, I took a sabbatical, and over the next X number of years, I'm going to dedicate myself to raise my family.
Yeah.
My husband is the one that took care of the taxes. Well, they will look at you and say, well, listen, but Marie, you have the expertise to at least have
Right.
spotted something didn't make sense, something doesn't cut
Right.
out. You know what I mean? So this, you have to go further and investigate. Did this person really was so disconnected and
Mhm.
was simply signing because we're filing a joint return?
Right.
Uh, and so, and but I would not discard the possibility there. In addition to that, there is a reasonable cost for when you can file a return late.
Mhm.
Death being one of the cases, illnesses, major illnesses, the situation of COVID-19 for those people that were affected by that. Uh, in some cases, you can, again, under reasonable cost, you can also file late and try to, at least reduce some of the penalties and interest in some of these cases.
Yes, absolutely. Just I'm checking in some chats, but there's some. Okay. Um, yeah, absolutely. And then from my end, I think when, especially when it's a case of a married couple or
Mhm.
married partners or whatever, when
Mhm.
they're filing, I think at least from my end, I feel that it's important for them to review it with their accountant CPA and
I
not
agree.
just sign it off right away.
I agree.
Because that happens quite a lot where, even as an individual, you might, yes, you do want to have trust in your CPA and accountant that they're doing what they're supposed to be doing, but don't be afraid to ask the question, what does this exactly mean? For example, on Monday we had a call with one of our clients, just wrapping up and reviewing the final return before we send it to her for signature, right? Like that's something that we want to do because we want to bring that type of information. We want to educate our clients. We want them to feel empowered and they understand what they're signing
Correct.
instead of just signing off, uh, you know, um, especially if they're still starting out and the business concept and these type of taxation is a new thing for them. So I highly encourage everyone to, whoever's your CPA or accountant or tax filer, always ask the question. It's not that you don't trust them, it's just that you should understand what you're signing. You should understand what the numbers are in. um, for example, if your business stuff, business numbers are put into the system, review it, put Schedule C, or if it's another Schedule S 1120, whatever the schedule is for the business. Look at the numbers. Don't be afraid to review the numbers before you sign off on it, because hey, mistakes happen when we're filing out. So don't feel uncomfortable that you cannot review it. Please go ahead, do that. I think you should.
Yeah.
um,
Yeah.
so
No,
yeah, and then on also still a little bit on this one on this specific client. So one of the things we had also recommended is that um, no matter what happened in the past, the best thing is to start filing from the year that they are now, let's say, single, right? Even if the partner passed away or whatever it is, to start filing from the year that they are now and start going backwards. Correct?
yeah, it depends. I mean, I would say that if there's several years past, if you cannot get quickly the last, I would suggest a minimum of 3 years. You know what I mean, to file. Now,
Hmm.
what could happen in situations is that obviously the most recent is what is quickly and readily available. So you can
Right.
go and file that one. But what happens too is in cases, for example, just say in year, if especially if you have any kind of flow throughs, and then you go back and uh, you have to file, you know, you could if ideally what you should do is file the last 3 year at once.
Oh,
Gather,
got it. Okay.
gather together if possible. I understand at times what happens is when there has been such a gap and the records might not be readily available. Instead of waiting and continue delaying and say, well, I cannot really get my information for, let's say,
Right.
now 2019. I understand, with COVID, so and so relocation. I don't know, some kind of boxes or stuff like that. But I do have 2021 ready right now. Well, let's get 2021. At least let's start getting
Yes.
in compliance.
Right. Understood. Understood. And of course, that is something that happened with our client where she couldn't get the records because they were in
Correct.
the spouse's computer and it was locked with
Yeah,
a
yeah.
password and nobody could get in there, so she couldn't actually access any records. So understood. So that's the recommendation is to file 3 years, the last 3 years right away, but if not, at least start with the most available one with the
Right.
record and then go
Right.
backwards as soon as possible.
As soon as possible. Because again, it goes back to your, in essence, your attitude towards addressing the situation. I mean, because then you can show that I have the willingness to get in compliance. This event happened, and as soon as I could, I got myself in compliant, and I went with the most recent information I have instead of waiting and delaying the process even further.
Right.
Excuse me.
Yes. It's always showing the good intention, the good faith.
Correct.
Absolutely. Absolutely. Okay. So we have another interesting case that we're working on. This was to me it was very interesting. Well, we have a gentleman that is a partner of a company. A few years ago, he got issued a 1099 directly from his one of the clients of the business, but he got issued and got paid directly into his account instead of through the business. So for that year, their tax accountant created a receivable so that he can pay back the money to the business, because technically it should not have been directly deposited into his account. It should have first gone to the business, and then from the business he should be just getting paid his salary, and then from there anything else. So the complication now is that if he pays, he's already paid taxes on that 1099, right? And the payment he received, but he still needs to pay the money back to the business and then still get taxed again. So it's a very interesting, very
Yeah.
interesting situation that I was like, well, this is a Pedro situation.
Yeah, this is the what happens on basically you cannot assign income to another taxpayer or entity. So what should have been done if it was intended to be an agreement. This is again the importance of having attorneys, contracts, having things very well laid out. Because for example, take yourself as an example. You have, let's say, Marie, the greatest CPA, PA. Okay, so that's your company.
Yeah.
So you perform your services under that entity, and you invoice through that entity. You collect your fees under that entity. Now, Marie CPA separately also sells insurance.
Mm,
Okay, so now she receives a 1099. Marie,
right.
not Marie, the greatest CPA PA. It's Marie CPA receives the 1099. Now, Marie CPA cannot assign that 1099 to Marie, the greatest CPA PA.
Right.
You know what I mean? Because she wanted that to be under that. So then she pays herself a salary. Unfortunately, unless you go back to whomever issued your 1099, somehow you can then make arrangements. So no, the fees, my commissions need to be paid to my entity, not to me individual.
Right. Right.
You can accomplish that through like you and I were discussing contractual agreements, how were the proceeds received, and so on. Who invoiced and so on.
Yeah. So in this case, I mean, is it still possible for their client to reissue the 1099s, or is it something that they may have to redo their tax returns?
Well, not knowing how the arrangement. Let's assume that it was in fact a mistake. Okay, let's assume that there is a contractual agreement between the individual. And again, this is not legal advice. I would, but I'm
Right,
just
right, 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 right.
will tell you that at least I would look at if there's a contract. The contract stipulates that the services are going to be performed by ABC Corp.
Right.
ABC Corp is the party engaged. Now, ABC Corp is the one that invoiced, and the funds from the client were wired or deposited, directly to ABC Corp. That you might have a case to potentially even go back. I cannot guarantee you, and I can't remember, it was a year or 2 years ago, but obviously the farther back is going to be kind of hard to go. But
Absolutely.
let's say there was a mistake of 2020, you can go back and tell them, listen, this 1099 was wrongly issued, and
Mm.
potentially amend and show that 1099 did not belong to the individual. It belonged to the corporation, because again, I have my contract, I have my invoicing, I have the funds were actually deposited in my business. They were not deposited in my personal account. So
Yeah, but yeah, and that was not the case actually. I mean, the contract, from what I understand, is the contract is with the company, but the 1099 and the payments went to the individual that performed
yeah,
it instead of the company.
yeah, that's probably was poorly executed.
Yeah,
And I don't know about the other advice. I'm not gonna, again, without understanding all the intricacies of the accounting part. I
right.
think was a poor advice on that part, because now, like you said, he has now a receivable on the books, and you gotta remove that receivable. You know what I mean, and potentially make some corrections uh, on the on the tax return, because I don't know. What I assume that probably they did is that they expected that to be a corporate income, so they
Right.
debit the receivable and then tax also the corporation. You know what I mean? Because I think, if I'm not mistaken, it was a C corp.
It, I believe so.
Yeah, so the C corp probably paid the tax, and he paid the tax because probably the IRS saw the 1099 issued to him and said, no, you need to pay the tax. So potentially here is to look at the 1120. If in fact that's what we're suspecting here, is that you go back and amend the 1120 to alleviate some of the taxation here.
Correct. Correct.
I mean, he might not be able to recover, but then at least if in fact the 1120, the corporation, let's say, did pay the tax on income that it did not receive, then
Right.
you ought to amend the corporate.
Right. Well, so yeah, this is awesome. Thank you, Pedro. This was, two very interesting cases we received this past few weeks,
Yeah.
and it was good to kind of cover them. Let me see. We have a few more minutes to go. Any other thoughts? Any other cool stories you have on your end you want to share with our
Yeah.
listeners and our audience watching?
The one to be watching for a couple of things. One is the stimulus check. Some people are
Mhm.
forgetting. The amount is not taxable, but make sure that if you did receive it, that is not included or shown in the return as you not receiving it. Because what happens is that some people, in my case, I will assume that you received it unless you tell me otherwise. Yeah, I
Right.
still will ask
Okay.
you. I will still ask you, but if you don't have it, you don't tell me. I don't know. I'm not sure. The reason being is, if in the software, the reason we're asking you, even though it's not taxable, is some people in fact did not receive it. If you did not receive the stimulus check, then you can receive it with your return.
Yes.
That's why you got to confirm it, because otherwise, if I put that you did not receive it, but in fact received it, then you're going to get a correction. You're going to get this nice letter telling you that we need to either reduce your refund, or you're going to owe a balance because that $1,400 you did receive it.
Right. And then the IRS has sent the special forms to make sure that people actually bring it with them to their tax filers.
Correct, correct. So you have at least a couple ways to find that. You have the letter. You can simply look at your statement. It was
Yeah.
issued in March of 2021. The amount is $1,400 per person. So you should be able to identify it. The other one, sorry, the other
You
one is
okay?
yes.
Get some water, man.
The other one has to do with investments, and I'll be brief on this. It's called the non-covered transactions, and some people are receiving 1099s B from their brokerage firms, and you're gonna see that it shows a cost. It shows the cost, but the proceeds. I'm sorry, the proceeds, but doesn't show the
With no
cost,
cost.
the basis. And so I had a case a couple years ago when somebody came to me, and then the prior preparer submitted the return with the proceeds and no and zero basis, meaning that the whole amount was subject to tax. So what happens in those cases that the non-covered is that the brokerage firm is not tracking the basis. Because really, believe it or not, it's not until 2011, in 2012, 11 and 12 is when brokerage firm were required to start reporting this on the 1099s. Before that, it was your responsibility as an investor to track the basis. So it's just basically within the last 10 years that we're seeing those statement that tells you, your proceeds, your costs, long term, short term, it's all of that. So if you have those older investments, you kind of still have the situation. I have seen a couple, even this year. I was telling you before that a couple of people that dispose of some of the investments, and
Yes.
are showing proceeds, and even they call me in panic. Oh my God, what I mean? It shows. I share with you an amount, and it's like she was like,
Panic,
yeah,
panic mode.
I'm gonna be owing so much. I said, well, not necessarily. We have to look at your basis. She has to now dig in and find some records to show the basis
Right, because you're only going to be taxed on the gain,
on the gain.
right? So it's not
Yes,
like the full proceeds of your
correct,
sale. So
correct,
if they
correct.
haven't reported, so anyone that has old investments prior to 2011, go back and start looking for your records. Make sure you have
Correct.
them ready, because if you do sell them and they're going to report a big proceeds, you definitely are not going to be paying taxes on that. So
Yeah,
that's a very good one. Thank you for sharing that, Pedro.
yep. You're welcome. You're welcome.
All right, awesome. So we are already at 31 minutes. So we want to be very cognizant of our audience's time. We keep it at 30 minutes because we know our audience is mostly business owners, and they are very busy. They have, they want to run their business. So we get that. So we keep it short and sweet and right to the point. So with that, as always, I will leave you guys with a quote from the motivational speaker, Jim Rohn. You are the average of the 5 people you spend the most time with. I hope that we are the 2 of the people that you are spending your time with and learning everything from accounting, finance, taxes, business strategies, sales, and marketing coming down as well. So with that,
Exactly.
I wish
Like
I wish
and follow and share.
and like, follow, and share, subscribe, and all of that.
All of
Invite
that.
people to watch us. Come
Yes.
on now. And with that, I wish everybody a wonderful rest of your week, and I'll see you all next week. Have a
Next week.
great one.
You too. Take care.